Okay, so I said the last one's going to be the last one, but I talked about restaurants. So here's how you finance a restaurant. You basically follow the same steps that I'm talking about, but in the offering, the actual investment product. If you want to do a one-off restaurant, and really, even if you want to do a chain of restaurants, because restaurants are, it's not like some kind of app. It's it's going to reach a certain scale, and then that's going to be it. A restaurant's not exactly a growth business. Just like a single apartment complex is not a growth business, 4 family or an 8 family. The growth business is a holding company that buys sequentially restaurants. There's restaurant holding companies, there's real estate holding companies, there's even investment fund holding companies. Those are called Goldman Sachs and BlackRock and those guys. Those are holding companies of asset products, right? So you're going to turn your restaurant into an asset. You're going to turn that apartment building into an asset. But the thing is, that's not going to scale. That 4 family is not going to like by itself grow into an 8 family and then a 16 family and a 32 family. So it's kind of a package with an endpoint, more or less, in valuation. So the way this works, you're trying to buy this property. Maybe you want to fix it up, or you've seen that it's an undervalued asset, and you've built your syndicate, and you're asking them to give you equity because you can't afford to pay a loan. You use that equity to buy this property, get it up to shape, and get it to where it's starting to make money. Now it's making money. And in 2 years of that, it's going to be worth more than the equity. So there's going to be this, delta, as we say, the gap between what you bought it for and what it's worth 2 years in the future. So at that point, you can go to a bank and borrow money against the equity that they put in and use that bank note to pay them off. Or maybe they would like to convert their equity, and when I say pay them off, I mean return their equity plus a pre envisioned gain. So maybe you're saying, look, you're going to put 100,000 in this property. I think that with the development, it's going to be worth 200,000. And so in 2 years, I'm going to give you back I'm going to buy out your equity for the 100,000 plus a $50,000 capital gain. Because now the thing's worth 200,000. You could go and get a bank note for something like that. Maybe you take out a bank loan for 150,000. You pay them. There's still 50,000 in equity left in the project. Maybe this is too technical terms, but the basic point is, I gave it a word because people in the investment field have heard of something called convertible notes. And we're not even going to talk about that. If you don't know what a convertible note is, don't do it. This is way over that's for people who are in my program. It's way too technical for YouTube, but it's a bad idea. It's a stupid idea. Even in Silicon Valley, they don't do it anymore. It was always a bad idea, but people have heard the term. And so because they know that term, they think they know something. They don't know anything. What is convertible equity? You sell equity in your restaurant to your investors, and then you convert it to a note. They can either opt to convert their equity to a loan and get paid back over time, or you can go to a bank. If they don't want to convert to equity, you go to a bank and you buy them out with cash. That's really it. So that's how you finance a restaurant. And how do you build your restaurant? That's got to be one of the easiest investor clubs to build. Just have parties at your house and cook. Invite people over, and if they like your food and your story, your story in words and your story in numbers, ask them to join your investor syndicate, your investor club, and have them pay. Have them pay for you to do the hard work of raising the money and getting the thing booted up. So they've got a nice home. Somebody's going to put in $50,000 into your $1 million restaurant. They can pay you $100 a month for you to just pursue the project. And then you've got your integrity. You're sending them that monthly report on what you're doing to get to the point where you're going to raise the capital. Let's say they put 50,000 in escrow. They give you 100 a month into your investor club. You're off to the races. That's how you do it. That's how you quit your day job. That's how you quit your day job and get paid to pursue your dream. That's what I'm here to teach you. I teach people how to get paid to quit their day job and build out their dream business or project. So if you want to do that, check in the notes below, book a meeting with me. It's right there, right on YouTube. Anybody can do it. Okay, thanks for listening, and put any questions you have below, and I'll talk to you later.